All right. Well, looks like this is the squad. Kyle, PZ, Samantha. Looks like this is the squad. So let's go and let's do it up. Okay, so step one, I'm going to remove every drawing I have on here, which right now is not a lot. I'm not going to remove my indicators, but we will go over that as well. So simply how you want to start this off, you can do it two ways. I like to keep my candles. PZ likes to go over and do lines like this. I prefer the candles, but you can do it either what way. The strategy is exactly the same. I'm going to turn off all my moving averages here. We're going to go over moving averages after we find our zones. And we're just going to want to look for points of heavy support or heavy rejection, which will then create a zone. So let's start down here. It's a bit low, but let's just start it so that we have it, right? Looking left, I can see that after a big shot up, we had a very big rejection here, came up almost to it again, did the same thing. And on the way, on the climb, this top here started to be used as a bottom. So we're going to go ahead, option H, create a horizontal line. Here's the top, here's a bottom, came back down, respected it as a bottom again, and shot up. So here we have our first zone of a very strong zone, right? Remember, these are 4-hour candles, so these movements are huge. Anytime you can catch a move from even here to here, you're running 180 to 930. So that's an 800-point move right there. So you've got your first bottom here or your top, depending on if it breaks below here. If we break below here, this will be a top where you're going to look for shorts. But as we sit above it, this will be an entry for long positions. Obviously, this is 2,200 points away. So the realisticness of this hitting this week is not high, but that's just kind of why you want this here. So after I set my horizontal line, option A, I set an alert buy interest. Since the candles are above, this will be a buy interest as it sits right now. So we'll move on. We'll find another place to do that again. For instance, I can see rejection, rejection, flip, rejection, rejection, rejection. So here will be another somewhat zone. Now, this one is obviously not as clean as this one, but nonetheless, it is a top, right? So came up rejected, kind of dwindled around and in the consolidation, rejected off the bottom, the bottom, the bottom, the bottom. And perfect example right here. When it broke, it failed to break it to the upside again and then used it as a top and used it as a bottom. So now you've got another zone here, right? And the only problem that I see with this zone, let me make these candles a little bit bigger, is once it broke it on this side, it didn't come back down to it. So not necessarily a problem, but depending on where your moving averages lie, you might not get down to this zone before catching another entry on a long. But same exact position, you can move this up and down a little bit depending on how strong you want this zone to be. For me, I'm just going to leave it where it is. And then when we approach the zone, meaning when market starts to come down here, I'll tighten up my zone a bit with a zone box like this, and that'll let me know more of an entry position. Because waiting for an entry directly off the line is going to result in missing a lot of entries. So once you get down there, kind of start to mark up a more of an ideal entry zone. And the way you do that is just by looking for wicks and candles, right? I just made this zone super quick, but we've got a lot of pressure down into pressure up, pressure down into pressure up. Same thing, same thing, same thing, same thing. So you're going to want the beginning of your zone to be somewhere where you start seeing a lot of rejection, like here, for instance. We were coming down, but we didn't come all the way down to the bottom of the zone. We rejected from this top of the zone. So that's how we find the top of the zone and the bottom of the zone. The top of the zone being, I guess the word you could say is a little bit more risky, but really what that means is, especially if you're a swing trader, This is where you start hedging into positions. This is where kind of your bigger position would be, right? Because your stop loss can be a lot tighter if you wait for the bottom of your zone on a buy zone. Whereas if you're in a sell zone, you're going to want to wait for the top of the zone to kind of mitigate your risk a bit. So we've got two line zones, and now we move up, we do it again. Now we try to find another decently clean zone. Obviously we are looking very far back right now. This is in March. And you're going to tighten up these zones as you go down in time frames. So for me, I see another potential right here. But top value gap here. Broke through it, started creating a bottom on it again, a bit higher, but that's again what that purple zone will be for. Respected it here, respected it here, respected it here. So this is another zone for me, another potential zone. Now remember, these zones that we're marking right now are really just your what's the word I want to look for? It's like the beginning of your journal. Like you're just free sketching right now and you're trying to find interesting positions. I see another one very obvious here. Top, 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 top. Broke through it, bottom, bottom, bottom. And this is what I mean or this is what me and P mean when we say if this zone breaks, we know where it's going, right? It respected it, came back down, didn't respect it, but all it did was respect the next zone, came back up, and actually gave us another entry in this zone as well. Okay, now we've got these over here. Let's look right a little bit more. Obvious zone right here. Top, top, bottom, bottom, explosion, came back down, bottom, came back up. Next obvious zone, right here. Bottom, bottom, bottom. This area here, there's really nothing going on. It was a straight shot up and a straight shot down, right? Like, whereas in the zone over here, we went up, we went down, we went up, we went down, we went up, we went down. We had a top, we had a bottom. This zone has no top or bottom, and you can see that because we have a small consolidation and then we explode up. Same over here. We respect this, but as soon as we break this line, we melt down to this line. We will go back up here to these all-time highs, and this one is a little weird. Yeah, we'll go right here really for the zone. Top, top, bottom, melt. Continue to melt. So these are our 4 hours. So I already set my alert on this one, right? Now I'm gonna set my alert on this one. And since it's below the area that we're currently trading, buy interest. Moving up. Below the area that we're currently trading, buy interest. Repeat. One more time. And now that we're going into the zones above us, we set our alerts for sell interest. Again, sell interest. Okay. So now we have our alerts on our strong zones. These are all 4-hour zones. So at the very least, there's scalpable zones, but again, it's going to matter what the market's looking like when it approaches that area. So we're done with our 4-hour. We will go down to the 1-hour. And we're just going to kind of look and see how our zones look. If they look as clean as they did on the 4, and they surely do to me. I don't see any other zones that I need to currently make unless I was going down here, but I'm not coming down here. I'll mark this up if we come down here, right? This is so low. And I mean, you probably at least a week if we melt to get down to here. So I'm not going to add in any extra work that I don't need to do at the moment. Everything looks good on the 1 hour to me. Obviously, you should have something up here, but that's not really a zone. That's an all-time high. It simply got touched and then see you later. Go down to the 30-minute, see if we can find any other zones that need marking down here. I don't see any. Our lines still look incredibly respected. Okay, so that's it as far as zones go. The quickest version of zones, right? This is just your layout or your base layer of paint, I should say. So now what we're going to do is we are going to turn on our moving averages. And the way you want to do this is go to indicators, type in EMA. That'll give you moving average. I obviously already have mine up. Let me delete one of mine so I can show you guys how to do one. I'll delete my 250. We will go to moving averages. Okay, now I have a new one. They will pop up over here. Then you want to go to this little squarish rectangular thing that says settings. You go into settings. Your length is the amount of candles on that moving average. So if I am on the 30-minute chart, right now I'm on the 30. If I put in a 5 moving average, that's going to show me the estimated moving average of the last 5 30-minute candles. 1 would be 1 candle, 2 candles, 3 candles. I just erased my 250, so I'm going to put in a new 250. I'll go to style. I'll do a color that works for me. Right now, I already have blue, yellow, and white. So I'm going to go over to red. And I'm going to save that. So again, your input, your length is the amount of candles, and style is totally up to you what kind of color you want, whatever is easier for your brain to register. I am going to save that, and that's going to be that. Now, here are the moving averages that I have. I have a 50 moving average, a 200, a 500, and a 250. Your moving averages get stronger as the numbers get higher. 50 moving average is 50 candles. 200 candles, 250, 250 candles, 500, 500 candles. So the more candles on your moving average, aka the higher the number, means there's more proof of history. The same way that when we look back to the left, that's what our moving average is doing for us. It's showing us what has happened in the last number of candles, whatever your EMA number is. And that, the higher the number, the stronger the result. For instance, if I go over to the 4-hour, give this thing a second to load. If I go to the 4-hour and I go to my 500 moving average, right? Let me turn off all of them except for my 500. I don't know why my chart is kind of being a cuck right now. Okay. You can see how respected this moving average is. Let's bring it from this point, for instance, right? Where's my little thingy thing? Oh, it's over here. Okay. Start from here. Touched it, didn't break it. Oh, that's the wrong one, sorry. I don't use these little drawy things enough. I never know where they are. Path, there it is, excuse me. Okay. So if we're starting from this point, we touched the moving average, we didn't break it, we continued up. Broke it a little bit, absolutely skyrocketed. Broke it a little bit, absolutely skyrocketed. And now we're on it again. So all of these candles here, it never even came down to the moving average. That's the 500 moving average showing you its strength. When it came down, it had a little break, but it never flipped below it. And that's why for the last couple of weeks, even though we have been melting on NAS, we are not breaking higher time frame moving averages. And again, to say that we're flipping bearish would be a reach because we haven't even broken this zone. which not that long ago was an all-time high. During May, this was our all-time high. So really, even though we've exploded up and we have AKA or quote unquote melted back down, we're really only sitting at May's all-time high. We haven't broken anything to be considered a true bearish flip, in my opinion. We simply had a bearish week, bringing us back down to very strong buy zones. And this is a zone that we had marked up. So that is when I consider a market flipped, like, okay, this is a bearish market right now, it would have to break this moving average exponentially. And this is the 4-hour moving average, mind you. This is the 4-hour 500 moving average. I can easily go over to the day chart and notice we've only broken the 50. Below us, we still have the 200, the 250, and the 500. So for me, for Nas to flip bearish, I need to see cross downs on these moving averages on the day chart. If I go over on the week chart, I doubt we're even at the 50 moving average. Yeah, like we're not even at the 50 yet, you know? So that's not to say that Nas doesn't have a long way that it could go down, but it's not nearly a bearish market yet. And if I want to draw a trend line here on the week chart, yeah, where, I could break this little, if I broke this and decided not to use this, we've got 1 touch, 2 touch, and it looks like we might be coming back down for 3 touches. So the trend is still up. Everything is still up. It's just we had a bit of a correction last week. And that's why I'm hesitant to call Nas bearish still. But back to moving averages. So the same way that your moving average is stronger with the higher number it is, your moving average is also stronger depending on your time frame that you're using. Right? My weekly moving average, so when I have a 50 moving average on a weekly, that means that this moving average is showing me the last 51 week candles. So this is 50 weeks of a moving average. And moving average is self-explanatory. It's the average way in which these candles are moving, right? These are all crossed up for a reason because we are going up. Whereas, I would have to go back. I don't even think I could find a bearish moving average on Nas during the week because we've only really been trending up since we started, right? Very beginning, I guess, in 2000, our moving average was our 50 was shooting down. But this is in 1999. So, and sometimes it's fun to pull up a very high time frame and look back 23 years and see how even when we have a little bearish week and we're all like, oh my God, we're selling off. Like, no, we're not. We're we're very high up. Nas is only growing, everything's only growing. The importance is finding the right position on your long or your sell. So let's as far as moving averages go, that's really it, right? Let's cover it really quickly in the simplest way. The number next to your moving average shows you the amount of candles in that time frame. 200 moving average on the 4-hour time frame is 200 4-hour candles. That's what that is measuring for you. Higher the moving average, stronger it is. 500 stronger than 200, 200 stronger than 50. What I mean by strong is it's less likely to break. Now, let's go over what a trade setup should look like. What makes something quote unquote valid to take, or better yet, let's say what the perfect trade would look like. Perfect being a strong word, but also if you guys want, I still use this time to time, but not as strongly as I used to. This is called a TDI. I got this one from TSA. So I don't think you guys have access to this one, which is why I'm hesitant to kind of show you what it is. But you can pull up any sort of TDI, I believe, on indicators. And what a TDI means is simply just being oversold or undersold. So when we have something like this cross down here, you guys see these dotted lines on here? When we're trading outside of here, that means that we are heavily undersold, and chances are it is going to need to correct itself. And as you can see, that happened, right? This got undersold right during this area. We were heavily undersold. We came and touched a band, and we rejected heavily to the upside. And although this doesn't look heavy, this is 18,911 to 19,326, so 400 points. If you guys want to learn about TDIs, I'm gonna drop this video, and when you guys watch it, you could let me know if that's something you're interested in. I'm just not in a rush to show anybody because I really don't use it as much as I used to. It's more of an extra key to the strategy, I guess, but not really too necessary. So let's go over a trade. Okay.
Sorry to interrupt. Just so you guys can access if you guys want it, all it is an RSI and a Bollinger Band um on one little box, right? So if you guys trade Bollinger Bands, it would be similar to where you would see price come outside of the bands, right? So the idea of the bands is to keep price in. When the price goes outside of the bands, it would go undersold or oversold on the RSI. RSI would just be like you would just turn this candle chart to maybe like a line chart, and you would get the exact same energy if you traded this, but on the big screen. So yeah, it's just a RSI and a Bollinger Bands.
Bada bing, bada boom. Okay, so let's go over a potential trade, and we'll just do it in the area that we're in. That way, if you guys are on your computers, we can mark these up together. So we have our buy interest here. This is a zone that we just marked up at the beginning of this Zoom. Now let's grab our rectangle, aka zone box, and let's just do it very, very rough like this, okay? Now, this is not realistic, right? You can't just draw up a box in a zone and be like, okay, I'm going to enter in this area. This is a 300 point box. You do not want 300 points of potential entry area. What you want to do is tighten this up as much as possible. So let's go over, knowing that our 400 or that our 4-hour 500 moving average has been broken to the upside. We need to go up a time frame and see what the 6-hour has going on in this zone. Boom, it has nothing going on in that zone. So that lets me know entries up here, I'm not interested in. I'm shortening my box to being below my entry zone. I want to enter off of a zone with a high time frame moving average. So in an ideal world, if we're looking for a buy, what's going to happen is we're going to hang out in this area for a bit, or maybe we'll come up here to our sell zone, which at that point we will have marked up. And by the time we come back into this zone, we will have a high time frame moving average sitting in this zone. That's 2 points for us right there. So again, tighten up your boxes. Even this is still a very loose box, and this can get tightened up more when this moving average comes back up to grab us. So for now, what I'm going to do, let me zoom in as much as possible to show this to you guys. I see a wick, strong rejection here. But what I see is 2 wicks and another few over here. Now, this one did break and maybe get some of us, but our buy zone was never broken. So what I'm going to do is I'm going to grab this chart and I'm going to move it up to here. Why am I moving it up to here? Because of this wick here, because of this wick here, and because of all this wick action at the beginning of our zone. So now this is the bottom of our zone, aka best entry. And this leaves us with a 70-point zone, which is still very large. But I'm going to leave this because some people are cool, depending on your style of trading, with 80 to 100 points of drawdown. If you're using a very, very small lot, that's fine. right? You might have had 100 points of drawdown, but you've also had 300 points of profit. So that's going to come down to your trading strategy. You guys already know I scalp with 35 to 40 points, if that. So my entry isn't going to be until this bottom of the zone. Now, how I'm going to find my stop loss? This break right here has made that very simple for me. My stop loss is below, my stop loss is below that break. So if we come down to here, I'll be waiting until at least here for my entry, and this will be my stop loss regardless. So my entry is probably going to be even a little bit lower than this wick because I don't want to use more than 35 to 40 points. But again, that's a preference. That's a me preference, and you're going to have to decide how that works for you. The only things we can really do for you outside of calling a specific trade while we're trading in the markets is showing you how to create these trades, and how to execute them is going to come down to you. Your risk management, your style of trading. Are you swing trading? Are you trying to scalp? Are you this? Are you that? Are you this? Are you that? Nobody can control that for you except for you. So that is how we're going to find a zone, right? And again, I am not interested in this zone until I have a high time frame moving average in this zone. I can go up, see if there's anything anywhere else, but I highly doubt it. No, the 1 week was way below us, so I know that's not in there. And the 1 day is above us. So, yeah, and I know all these moving averages are currently above us because we melted last week. And the more you use moving averages, the more you're going to kind of understand how they work. Since we did have such a bearish week last week, I just know already off the top of my head that really anything shorter than 4 hours, the moving average is currently going to be above us. I don't even need to look to just know that in my head, right? They're all above us, anything under the 4 hour. So notice how this is where it can get a little bit choppy on taking an entry on a long. So in the grand scheme of things, we are long, but any shorter time frame, like the 3 hour, all the moving averages are above us, letting me know that we are currently small time frame bearish, large time frame bullish. And that's where it can get tricky on how to trade, right? I'm going to take this sell 10 out of 10 times, and I'm going to leave this alert here. But I'm also going to take this buy 10 out of 10 times because we are overall bullish, short key bearish. Micro trend, I don't use micro trends, Amare. That's not my thing. But you seem like you do, so maybe throw that in the Discord. I'm really not a micro trendy kind of guy. But just hold on a second. So again, back to perfect trade, right? We have our zone. What we want next is a moving average in our zone. That's not happening at this current moment, but we can kind of do that up here. But I don't want to do that right now. I want to go over another point of a trade. Your fib is huge. I've started using it a lot lately. The way I use my fib is I look at the market. Okay, we are overall bullish, but right now we are bearish. So I'm going to grab my Fibonacci from my swing high to my swing low, which is right here. So we do have a level right here, and you can see that being respected. But better yet, we have a strong level right in line with our zone. So that lets me know this is a very valid zone. I will start creating a box around this zone, something like this. My fib level is in there and my zone is in there. Now let me go to a time frame that I have a moving average in there. Okay, cool. So we've got a bunch of 4 hour moving averages in this zone as well. Let's tighten up. We don't want this. This is the 50 moving average, but we're just not going to want to take this because it's already crossing below the zone. What we want to do is wait for something in between this fib level, right? Here's our fib level. Here's our zone that we created with our alert. So what we want to see potentially is this one of these moving averages, these higher time frame moving averages, come into this zone. give us an entry in that zone with our fib level being here, meaning we will almost most certainly get some rejection. And we know that this is support and resistance because we drew it up earlier in the session. So here we have a 3-point trade. What's going to make it a 4-point trade is if you're going to use something like your RSI, your TDI, to see if you are oversold when you get to that area, or you can draw a trend line. I'm really not huge on trend lines. I don't know why. I just don't really ever think to draw them in, but you totally can, right? Grab your high point. P really is the trend line guy, but I guess it would be something like this, right? So your trend line also would somewhat match up with your zone. We've got a bunch of 1 hour. This zone is going to be beautiful for a sell-off if we can push up here this week. Very excited to see if we can get that zone. So let me move that, like, I don't even, yeah, I don't know. Oop. Yeah, again, I'm not really the trend line guy. I think it's cool to use if you understand it, but for me, trend lines are just weird because I feel like you can draw them anywhere. Like anything can kind of be like, oh, that's a trend. They just don't resonate with me. They're not something that I rely on. I'm very heavy on moving averages, fib, and support resistance. That is the style that has worked out very well for me. So yeah, again, that's really what you're looking for when you're looking for a trade is support resistance, a high time frame moving average, a strong moving average, your Fibonacci level. And then you can start looking at other things like your RSI, aka TDI, Bollinger Bands if you're using them. I remember we used to be really heavy on Bollinger Bands. And then just kind of overall it's weird to say, but like the vibe of the market that day, like is it just breaking through zones insanely? If it is, lower your risk. Has it been respecting and moving accordingly? Be a little riskier. Are you scalping? Are you intraday? Are you holding? Whatever your strategy is, And then the same way that we did this on the high time frame, we can go down to a lower time frame and we can do the same exact thing if we felt like it. If we're like, okay, today is consolidating, right? Let me delete my fib. Let me go to the 5-minute and I'll just say, okay, well, here's a top that was clearly formed, right? Came up, tested it, shot down, came up, shot down, came up, shot down. Here's a top that we've created. And here is well, obviously here's the bottom, but that was only touched once. So our bottom is our zone. And here's our top for the day. Now, is it riskier to take a short from here? Absolutely, because this is only 1 day's worth of proof. This is just a 5-minute. But if you're feeling like scalping, there's a top and there's a bottom today. And at some point, the problem with doing it on a lower time frame like this, not necessarily problem, but you're gonna get way more zone breaks than you would on a higher time frame. As long as you're cool with that and you accept that, you're fine. Like I will scalp this top and this bottom until it breaks. I'm not tripping. But you have to realize at some point it's gonna break and you can't chase that. You don't chase lower time frame tops and bottoms. I'm just like, yeah, like I don't know. I guess that would be like the trend, right? 1 touch, 2 touch, broken on the 3rd touch. Maybe Peasy will go over trend lines for you. You never really see them on my charts. I really just don't. It's not that they don't work because they very clearly do. The market moves in trends, but my moving averages to me are kind of my like trend lines. They kind of form themselves for me. Um, but yeah, so everything you do on a high time frame, just go down and chop it down onto a short time frame. And you will eventually understand what you're looking at, what you're talking about, and where your entries lie, right? What you're looking for in an entry, moving averages, Fibonacci level, support resistance, overall movement of the market. I'm more inclined to bet a little heavier on a buy than I am a sell, even though we are in a short term bearish market at the moment. But I still love this sell zone. When it comes up here, as you guys know, my alert is hit. I look at the markets, I see what's going on. Do I have any moving averages in there? Is there a reason for me to take the trade other than support and resistance? Because support and resistance in and of itself is not enough, but it's a great base layer for a strategy. But even just trading support resistance, you'll still be a 30-40% trader. And if your risk to reward is on point, 30% is a green week. Risk to reward is maybe we'll do another Zoom on that. I don't know. I think it's kind of self-explanatory, but maybe it's not. So maybe this will be step 1 on how to take a trade. And then we will go over risk to reward, managing a trade, and doing all that, which is a little easier for me to show you guys live when I'm in a trade. Kyle is usually the first one on the Zoom and usually sees me take a trade or two right off the bat and how fast I trail my stop loss, protecting my capital, which sometimes really screws me out of a great trade, but sometimes gives me that runner that I need. So last week I had a very internal battle about why do I keep moving my stop losses like that, but I do. It works for me. And that's the important part of once you figure out how you like to trade. Don't look at how someone else is trading and be like, oh, well, that's working too. Let me try that. If what's working for you is working, simply let it work. Don't sacrifice happy for happier. Don't sacrifice good for better. Stick to what you know, what makes you comfortable, what you like to do on these charts. Stick to what's profitable. Now, if you're not profiting, that's a different story. Then maybe switch it up. But if you're clearly good at what you do, just stick to what you do, would be my greatest piece of advice. Yeah, and also again, just on a lower time frame, we have a support, we have a resistance, we have a moving average coming into play. So this would not be a bad scalp either on the short side. Obviously I love this zone, and that goes back to having our zones and our strong zones, and zone 1, zone 2 is higher time frames. Higher time frame zone will beat a lower time frame zone every time, but it's going to take a long time for it to get there. So that comes down to patience. And I like to take a daily trade or two. So we are going to run out of time here in a few seconds. Appreciate y'all for showing up, and I will upload this onto the YouTube. So we'll just let this play out the next 20 seconds or so. Skadoosh, squad.